Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It is October 12th. This will be our chart lesson for the day. And before we get into the lesson, a couple of things I wanted to discuss today. First of all, I wanted to talk about trend lines. We've had a lot of comments lately about the trend lines and whether or not they're subjective or uh, you can really find these trend lines the way we do it. And I've tried to explain to people that trend lines are not really subjective. You can be close and still be good enough, but you got to be at least close. And there, there's actually a rhyme and a reason of the way we do the trend lines. I did a video. I put it on the website today. It's a free video, so you don't have to be a member of our site or anything. You can go there and watch the video, and I show you how I do it. I show you how I find, specifically, there were some comments about yesterday's trend lines and were mine right or were theirs right or whatever. So I did a video to try to help with that. And one thing I want to make sure you understand is trend lines, there's a set of rules that we use to draw them. And generally, 9 times out of 10, your trend line will start off your first 2 swings. That's 99.5% of the time, probably. Occasionally, you'll get a spike in channel. Like today, this looked a lot like a spike in channel. And maybe it was, um, but I still think you've got to technically, basically what I think is you got a 2-tiered channel working down here, and prices are swinging back and forth both sides of this midline working through here. And in the end, it's a range day. And a lot of times on a range day, even though we got a break here, prices still tried to come back and retest the low, but it's a range day, and we ended up getting a 2-tiered channel going the other way. And so you didn't need, you didn't have to get a new low. And nothing is ever written in stone with price action. The rules tell us that most of the time you're going to get a trend line break, like right here. You're working up, you get a break, a move to a new high, and then it's over. Here, coming down, you get a break, move to a new low, and then it's over. Now you're working up, and generally that's what's going to happen. But it doesn't always happen that way. When you get a range day like today, the range is there's too much support, so prices can't get back down and retest the low, and all that tells you is the prices are probably headed to the upper side. So look what happened. Prices worked down here. We started reversing, and once it was obvious right in here, really, that we weren't coming back to test those lows, um, where do you think prices are probably headed? They're probably headed to test the overnight highs up here. And you see the 2 lines. This was your overnight low. This was your overnight high. We overshot it slightly here. We actually overshot it slightly up here. We didn't close outside. And when we got back to the top, we met that line to the tick and turned down. And so, people will say, why'd you have your line here? Well, that's where you had the most touches with the closes. See that right there? Same thing here. The reason I chose this spot is you got the most touches with the closes, plus that's the overnight low. Originally, I had a little bit higher right there. And notice that's exactly where prices closed for the day. Actually, they didn't close for the day, but that's where they're stuck right now. But it ended up you get more touches and closes right there by the end of the day, so I moved it down a little bit, and that's how I come up with that. But make sure you go watch that video because I think it'll be very helpful to you. I mean, this is a good example right here. Notice you could have had this trend line in place right here before prices ever got to here to make your second swing. And let me show you how that would work real quickly. Let's say prices bounced right here and they're working up. Well, I would draw this trend line off the upper part right across here. You can see that working right up across there. And then I copy it. I make a copy of it right there. There's your copy, and I slide it down. And so notice where my trend line's sitting. So when prices come back to it, I don't know for sure that prices will turn there, but that's what I'm expecting. And look what happens. Prices come over to it. They turn right there and go up. It looks like maybe we get a close outside right there. It's hard to say though, because this might actually be a little bit lower here. You want a convincing close outside your trend line, And this one's pretty close, so you needed to be careful here. But notice how we still, after we broke lower, we went up and made a new high before we turned back down again. And generally, that's what you would expect to happen. So that's how you find those trend lines. And there's trends. There's a shorter term trend within this bigger trend here. Notice all my shorter term trends in there. There's trends within trends, and there's ranges within trends. There's trends within ranges. This stuff works on every level, and that's why price action works on any time level, any size chart you try to use. There all these things are interacting with each other. This shorter term trend runs out when it meets the higher trend line. So you got to remember that and understand that. And people that don't quite understand it think that there's something else going on, or that, okay, sorry, I had a slight interruption there. I can't remember where we left off. I think I was still talking about the trend lines. Just remember that the trend lines aren't subjective. I just showed you how I do it on this one right here, and you can make that work on, I can show you. If you go watch today's video, you'll see it there as well. The other thing I want to talk about real quickly, every so often I'll get the question, why won't you show your trades? The whole idea behind, there's a couple of reasons. And first of all, the reason I do these chart lessons is to show you the trades that form during the day using our rules and using price action. I don't do it to show my trades. It's not about showing my trades. And I've made that very clear many times. And showing my trades doesn't help. The only reason people really want to see my trades is they want somebody to say, to prove that, hey, this really works. Trust me, it works. Other people can come in and tell you that it works as well. And it's the people that just can't find success, and they don't understand how hard this is to do. And they just, eventually people will say either it doesn't work, or they never believe it works, or, if you just look at this chart, this looks crazy and random. But if you understand price action, you know what's going on. There's a range. Prices work to the low of the range, and now they work to the high range. And then what are they going to do? They're going to work back to the low. And I've state that hundreds of times. So this is not about my trades or showing my trades or me being right or me being wrong. I don't get all of these right. I have losing trades. Yes, everybody that trades, that's part of trading. So this is not about showing my trades. That's number one. But number two, so much of trading is mental. And the minute I know that somebody's going to see my trades at the end of the day, that automatically changes my thinking, and it affects my trading. And so I don't want to mess my trading up thinking that, hey, I got to show my trades at the end of the day, because if I know I may take a more aggressive trade here, but if I think I got to show it to somebody at the end of the day, I might say, no, this is not a high probability trade. I better not take that trade. And so much of what we do trading is mental. And if I think that I have to show all of my trades at the end of every day, then it's going to instantly change the way I think about my trades, and it's going to affect my trading. So that's another reason I don't care to show my trade. It's not about my trading. I could show you my trading every day. It's not going to help you one single bit. If I get them all right or I get them all wrong, it's not going to help you any, not one bit. Just like me showing you the trades here doesn't really help you unless you go back and study them and understand why I marked them and why they're marked and why they're considered good trades. That's the key to all of this, is putting in the time. And most people that come into trading, especially day trading, they are thinking get rich quick. Anybody can do this. They read these books and they get all these rules about risk reward and all this crazy stuff, and most of it's wrong. Even in the books you read that you buy from Amazon or from bookstores that are written by supposed expert traders, most of it is wrong. And I show that all the time. Most of these books will teach you to trade the breakout. If you went short there, what happened? You went short the very low and got stopped out, or you took a huge loss. you know, 9 times out of 10, you want to fade the breakout. In other words, if it breaks out down here at the low on a range day, you want to buy it. If it breaks out the high of the range, you want to sell it. And most books I've ever read teach exactly the opposite. They teach about all these wedges and things. There's no such thing as a wedge. What causes a wedge is two conflicting channels that come together. That's what causes a wedge. It's not. There's no such thing as a wedge. It's all channels and ranges. And that's what you get with trading. And so that's the other reason I don't show my trades. It's not to hide anything. It's not to cover up anything. It doesn't matter what my trading is. I could lose every day. It still doesn't matter that this stuff doesn't work. You just have to learn it. And what happens is people just have unrealistic expectations and they're thinking get rich quick. And this is not get rich quick. This is a job. And when it feels like a boring job that you got to come into every day, that's when you'll know you're pretty close. If you come in and trade and you still get excited about wins and you get all down and out when you have a bad day, then you're still too emotional and you're not going to be successful as an emotional trader. And that's part of why I don't show my trades, because the minute I think that I've got to show my trades at the end of every day, it's going to start affecting what I do and how I think about every trade. And I don't want that, because it's just going to make it harder for me and it's going to make me make mistakes. So remember that so much of trading is mental. And the real key to all of this is not my trades, not the trades I have marked on here. It's studying your trades and studying the trades I have marked on here. The reason I do this is so you can come in at the end of the day and look at my chart, the trades that I've pointed out that are all good trades, and compare it to what you saw. And if you're getting good at this, you'll start to pick out the same trades I will. A lot of people do that already that aren't even probably profitable yet. They still start to pick out the same trades. Why? Because they're starting to understand it. They're starting to see the stuff. So that's what makes you a better trader, is studying your chart, studying your trades, studying my charts. And I promise you, you're not going to get better by seeing my trades or any other trader's trades. I promise you could sit side by side with me and trade for months, and you're still going to get up and go sit down, and you got to learn all this on your own still. You can't learn it watching somebody. That's the reason I don't believe in trading rooms. I could start a trading room tomorrow and charge a fortune for it, and people would line up to get in there, but I'd just be taking your money. I'd be wasting my time and taking your money and wasting your time. So that's the reason I don't believe in trading rooms. Most people, I can't tell you how many people come to me and say, I was in so-and-so's trading room, paid a fortune, and I should have just looked at this stuff and, spent $200 or $100 or just watched your videos for free on YouTube that you give every day. I'd have done better. So I hope that's helpful to people. I hope that answers the questions. I spent 13 minutes on it, but it was probably time to have some of these conversations again. But I'm going to back out, talk about the trades. You can see it's a range day. We had a trend down, a trend up, and then, of course, there was another trend down right here. And you can see it working down. There's a break, a new low, but we were headed lower. There's probably a spike in channel here. You can see that trend line right there. It doesn't really fit real well on the bottom. It doesn't look like it. Yeah, maybe right here. So, yeah, there's your spike and channel down. I'm not crazy about it, but it should fit on both sides. As you can see, and that's really the lower side of that price action. Copy that and move it up. It really fits better off the upper side. So I really like it better. I really don't like the spiking channel. So your prices should fit. I mean, there's a shorter term one here for sure, and that's the only one that mattered, because once you got out here, we're into the 3 o'clock hour anyway. So, or after the 2 o'clock hour. So this is the only one that really mattered at the moment. And I got it off the first two swings. And you got a break and a new low, and then it tried to rally there, but prices were actually headed down here. So, and that's what happened on range days. But let me back out and talk about the trades. Coming down, first of all, you should have measured that first move, which is from here to here, and then moved it over to here. But being a range day, we weren't going to get there. So you want to measure really you had from there. I'm moving the wrong thing. No wonder it won't fit. You want to measure this leg right here, and then once we started lowering again, you're looking for a measured leg. And look, we had a perfect measured move. I would have measured again the one from here to here in case it's not a range day, because if we kept going lower, I would have looked for that low, which you can see is way down here. We didn't get there. So my next, once we started going lower again here, I would have measured this shorter leg and moved it over and looked for that. And there you got a perfect measured move there, basically. So anyway, and then go on, once we started up, you measure this first leg, move it over to the low there, and you see where does it give you back up here at the highs, and that's exactly where we're like a tick short of that. But that's because this was your tougher place to get through, and everybody was waiting on it and started selling it. So remember that. Always look for those measured moves. There's another one right here, and then you got your correction. Basically a perfect measured move. Where's it back down to? Where you're expecting your possible trend line to be. That also helps you to figure out where that trend line might come into play ahead of time by just drawing it off these first two swings down here. Really, you could have drawn it right off of that swing there, drug it down, and look, you'd have been waiting on those right there. I mean, it doesn't, doesn't get any easier than that. And people will tell me you can't do that. Well, look how I did it. I just drew it right off of those closes right up through there, those first couple of swings. So once it started down, it might have been a little confusing here, but it's just an overshoot and it works back down. But I still would have had it sitting right there, waiting. And you might have had to move it up or down a little bit. Maybe you originally had it right here. You probably would have had it right off those closes, and that's perfect. Look at it. But let's just say you had it up here a little higher. Still looks pretty good. It comes back down again though, so I probably would have adjusted it a little bit there. And I mean, we do this every day. It works. It's a skill though. It takes time and a lot of hard work to learn to do it. And people want to try to argue that it's subjective, that you can't do this. So anyway, that's, I don't want to be mean or ugly about it, but I hear that a lot. I mean, I have that about every 6 months. Somebody will come in and start saying that, and trust me when I tell you it's not subjective. Can you get it right 100% of the time? No, but you can get there 90% of the time by doing just what I just showed you. Right here, all you had to do was draw that line across those closes this morning, drag this up, and you would have been waiting on that turn down right there. Would have been waiting on it, which I forgot to mark it. Perfect setup. You got your close outside your trend line, move to a new high, turn down right off what you're expecting as a trend line off these first couple of swings, first few bars, and boom, off it goes. It's like clockwork. Anyway, first trade. We're 20 minutes into this, and first trade, we haven't even talked about it. We're working down. At this point, you don't have the big trend line in place really yet. You just got this working down, and prices close outside, move to a new low, and look, there's a bunch of support there from the previous day, a bunch of resistance there from the previous day. That's an important spot that's probably going to bounce prices, and we're a little bit away from the EMA. So if you want to be aggressive, I like going long there. This is looking like a range day. Not so much just yet, but I'm already suspecting it. It bounces. Again, it's aggressive, but we're a long way from the EMA. I just showed you the support and the resistance across there. It's probably going to at least come back to the EMA, but we've had a break of this two-tiered channel and a new low. So it's probably going to, if there's a bigger trend line up here somewhere, it's probably headed back to that. And that's exactly what happens. It starts working up. You got to close outside, move to a new high. There's already some other resistance right across there as well. It's another reason to like this trade. We don't really get to it, but it's close. It's close enough. But that's because of the trend lines there. And you get the close outside. So now we're going to probably test this low again. Or you may start another trend down, which here's your shorter term one. I've got it working. And If you catch this one, you ride it all the way down. Nice trade. You only got a scalp out of this one, but this one you can ride it all the way down. And notice what happens. You get a close outside, move to a new low, it double tests that low, and then it reverses. So that's the end of that short-term trend line. You get a close, a new low, and you get a reversal right there. This one is real close to being green. I like it because it's the reversal pattern. It's a failed second entry short. If you can get in with enough room to, if you can enter with enough room before you get back to here, I like taking it just because this is looking like a range day. We're finding support right across this support resistance line that was doing the same thing yesterday. So it's probably going to come back into play today. So that's the reason I like that one. It turns out that you catch a low here. And so when somebody sent me something wanting to know about, ask him if I thought we'd retest the low here. I said, yes, but let this play out first. All right, you draw it off those first two swings using the closes. And look, it comes back into play right here. You get a second entry long, but it's not a very good signal bar. You get a close outside for sure, move to a new high, and it reverses. And so now this one's over, and we're probably going to go test the lows again, unless it's a range day. We still tried to go test the lows again on this, but it was a range day, and it found support here off that trend line and went higher. But anyway, notice what happens. You make a new low, you get a second entry short right there. There's a new low, first entry, pull back, second entry, it fails. Nice bullish bar, go long right there. And off it goes. And you get a nice move right there. So you could have got several points out of a runner right there, which you would have had on that trade. And then it turns down. And notice what happens. There's your first two swings. Draw that trend line. And then you get a failed second entry long there. There's your reversal pattern. It pushes through, pulls back and tests the EMA. Failed second entry long, go short right there. If you get it, you may get lucky and we're headed to make a new low. Either way, you still got a trend line working out here. There it goes. Okay, I had an interruption. I'm sorry. But anyway, you get your close outside, you move to a new low, and then it bounces right here. This one's questionable whether you really got to close outside. So it tries to come back and test it again. But look again what happens. You get the confirmation of that trend line right there. Actually, this one should be green right here, because there's reasons to want to take that trade, because it looks like there's a close. It's just real close, so it's kind of iffy. But notice you get it, and look how far away we are from the EMA. Plus, there's this trend line, so there's some reasons to take that. It's a little aggressive, but here's where your reversal pattern comes in. Your failed second entry short, it reverses. And again, it's inside the trend line, and this one should be blue. I can't remember. I don't know why I made it green. I think I meant it for it to go here, and I never got to this one. I've had about 50 interruptions trying to do this chart lesson today, trying to put it together. But anyway, you got your confirmation of your trend line here. You just got further confirmation here, a failed second entry short. I think the reason maybe I had that one green is because we're not back to the EMA, but with that trend line working up there and a double bottom here, I like that one. If you didn't enter here, you might, when it pulled back right there, you might enter. And then of course this is a double bottom, so you get another failed second entry short right here. This is a first entry counting off the high, so I think you were better off to wait here. I would have liked it even better if it ticked lower and then went up, but this is really where your second entry comes in right there. It's still bouncing so off the EMA, so I like that one. And of course it gets up here, and you can see you got your close here and you move to a new high, and then you get another trend working down. I just drew it off those closes down through there. Fits on the other side. You get a close outside, it tries to go lower, and then it takes off to the high side. The only reason this one is green is because we didn't make a new low, and we're kind of going sideways here. There's a lot of overlap, doji in there. It's not a very good, it's not a perfect setup, but you're still looking for prices to go higher. We're in a trading range. We're probably headed up here. And so for that reason, I like that one. It didn't work out. It made its new high and it turned back down. It's a nice, easy scalp. When I say it didn't work out, it didn't go back to the highs, but it was an easy scalp. Comes back down. It tries to go lower twice and bounces right off the trend line. I don't like that signal bar. This is a second entry, but when this one forms, I like that one. Your stop still has to go below this bar right here, though. It wouldn't have mattered where you put it because it's headed higher, and where does it go this time? Right to the high you're looking for it to go to, the upper side of the range. And then it turns down. There's a failed second entry long there. You could have gone short there if you were, it's right at the cutoff time late in the day, but it's a failed second entry long. And if you had room to get out before this trend line, I'd say probably take it. So, especially since you just came off the top of the range. So, not a very difficult day. There's, you could argue for some other trades in there, but these are the ones I saw that I liked, and without getting too aggressive, a few green ones in there, but a couple of them are borderline as well. So, but yeah, I hope all this was helpful. This is a 30-minute lesson today, but if you didn't see the trend line video, it's there on the website. Go check it out. It's free for anybody that wants to see it. You don't have to be a member or anything. You can just go watch it. And it's just more of what I showed you earlier. And it's really talking about yesterday's chart, which had a lot of questions. And back to the scalping channel, I can't remember if I talked, not scalping channel. My mind is, I'm really distracted today. Spiking channel. Is what I was trying to come back to you talk about here. This really looks like a spiking channel, and it really kind of plays out like one. Notice we spike down, and then you get a couple here. You get a trend line right there, and it really fits except for right here. So, but this could be your break and a move to a new low. So if you saw it that way, that's okay. It works that way. But in the end, I think there's a midline right there, and you can see the prices are working both sides of that line. And so I think it's a two-tiered channel. But the only difference I would say is if you use it as a spiking channel right here, you do get a break in a new low before it reverses. But even on this one coming up, notice we never had a break in a new high. We just came off the high and went to the low. And that's the way range days do. So you don't always get a retest on range day. So just keep that in mind. So anyway, good trading day again today. It was a range day. You can trade the ranges up and down, and notice how prices are above, below, above, below, above, below, above, below. That tells you you can trade it both ways. When you're back and forth above and below the EMA quite often, that's a range day. Or even if it's a trend, it's got a range characteristics, and you can still often trade both sides of that trade. So anyway, I'm going to wrap it up. 30 minutes is more than enough today. We'll be back again to do it tomorrow and wrap up our week. Today is Wednesday, I'm pretty sure. Yep. So we'll be back again tomorrow to do Thursday, and that'll wrap our week up. But I hope you had a good trading day. I hope the extra information was helpful. And anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.